If your bank freezes your money for 2 weeks and you cannot touch it, you did nothing wrong. You broke no law. That is a real thing that can happen to you right now. In a growing number of states, banks now have legal protection to delay your transaction when their system flags it as a possible elder fraud pattern. Not as a punishment. Not because you are a suspect. Because the scam scripts that are draining older Americans of billions of dollars every year follow predictable patterns, and your perfectly innocent transaction can accidentally match one of them. Here is what I want you to understand. That freeze is not the enemy. The scam it is designed to stop. That is the enemy. The 3 trigger patterns we are going to break down today are not traps set for you. They are behavioral patterns a trained banking system reads as a fraud signal. Understand them, and you are in control. Miss them, and an innocent visit to the bank to wire money to a roofer or take out cash for a car can end with your account on hold. In the next 15 minutes, exactly what triggers these holds, why banks now have legal cover to use them, and the 1 2-minute step that may help your bank resolve a concern quickly instead of letting it drag into a 2-week hold. I'm also going to clear up one of the most dangerous myths online about the $10,000 cash rule. The version you may have heard could put you in serious legal jeopardy if you act on it. Here is the roadmap. First, the late 2024 interagency guidance that banks are acting on right now, and how the safe harbor laws behind it actually work. Second, the 3 patterns that trigger a hold, each explained so you know exactly what the system is trained to flag. Third, the $10,000 rule, what it actually is, and why the so-called alternative advice floating online is a federal crime. And fourth, the trusted contact, the single account setting that may keep a protective hold from becoming a 2-week headache, and how to set it up. Let's get into it. One quick ask before we start. If this kind of plain English warning is worth your time, hit like and subscribe now, so the next one lands in front of you automatically. Part 1. The late 2024 guidance banks are acting on in 2026. In late 2024, 6 federal banking regulators, the Consumer Financial Protection Bureau, the Federal Reserve, the FDIC, the OCC, the NCUA, and FinCEN, issued a joint interagency statement formally encouraging banks to use what it calls risk-based transaction holds when they have reasonable cause to suspect elder financial exploitation. The CFPB framed these tools as protecting older adults while minimizing disruption to legitimate transactions. The goal was never to freeze every senior's account. It was to build a speed bump between a scammer and your life savings. A growing number of states have now passed safe harbor delay laws covering banks and credit unions, and more are added every year. For a long time, these applied mostly to brokerage accounts, but states have increasingly extended them to everyday bank accounts. These statutes reduce a bank's liability for delaying a transaction when it has a reasonable basis to believe exploitation may be happening. The hold length is set by state law, so it varies widely. Roughly a couple of weeks in some states, up to 45 days in others, like Florida. Some states allow extensions when the bank has reported the suspected exploitation to Adult Protective Services. These holds are not arbitrary. The bank must have a reason, and that reason is almost always behavioral. A pattern in what you say and how you act, not how much money you have. The key reframe: the bank is not judging your character. It is matching your transaction against known scam scripts, cataloged and trained into staff and systems. When a customer uses those phrases, shows that urgency, or expresses that specific confusion, the system flags it, and it surfaces most often on exactly the transactions retirees make: a home repair, a real estate wire, helping a family member. Part 2. The 3 things that trigger a hold. Number 1. Mentioning that the money is for someone you have not met in person, or connecting it to a prize, a tax debt, a tech support problem, or a request for gift cards or cryptocurrency. This is the most common script in elder financial fraud right now. A caller tells you that you have won a prize and need to send a processing fee, or that the IRS is pursuing a debt and you must pay immediately, or that your computer has been compromised and a tech support team needs gift cards as payment, or that someone you met online is in trouble and needs a wire transfer. All of these share the same tell. The purpose of the money is tied to a person or institution you have never met or verified in person. When a customer says, "I need to wire $2,000 for a prize I won," or "This is for an IRS agent who called me," the teller's training and the bank's monitoring both activate immediately. The real IRS does not demand immediate payment by wire, gift card, or crypto, and does not threaten arrest over the phone. When a scam script invokes the IRS that way, the bank system knows it. The move to make instead is simple. If you are making a transfer for a legitimate reason, paying a contractor, covering a medical bill, wiring earnest money, name the payee specifically, and bring documentation. "I am paying my roofer. Here is the invoice." That clarity moves a transaction through quickly. Number 2. Saying that you were told to keep it quiet or that someone told you to send the money urgently. Urgency and secrecy are the twin engines of every financial scam, whether it is a grandchild in trouble scam, a romance fraud, or a crypto scheme. Scammers use urgency to stop the part of your brain that asks questions, and secrecy to prevent someone you trust from intervening. "You have to send this today, or you will be arrested. Do not tell your family. This is confidential." Banks hear these phrases every single day. The moment a customer in the 60-plus age group describes any version of, "I was told to do this quickly and not discuss it," the transaction gets escalated, often to the branch manager, sometimes straight to the trusted contact on the account. The practical takeaway: if you're moving a significant sum for a legitimate reason, call your bank the day before and walk them through it. Give the payee's name, the amount, and the purpose. That short call meaningfully reduces the odds of a legitimate transfer being flagged as a scam. Number 3. Sounding confused about why you are making the transfer or being unable to name the payee clearly. This is the most uncomfortable one to discuss because it overlaps with something banks take seriously: cognitive capacity. When a customer cannot explain what the money is for, cannot name who is receiving it, or seems uncertain whether they initiated the transaction, the bank has a genuine protective obligation. This is not about intelligence. It is a pattern that closely tracks a specific type of exploitation, where an older adult is coached to execute a transaction they do not fully understand. A bank representative who gets confused, contradictory, or scripted-sounding answers is trained to pause. This is also the scenario most likely to trigger an outreach to your trusted contact. The fix is the same as number 2. Know what you're doing before you walk in. Write down the payee's name, the amount, the routing number, the reason. That preparation is the opposite of the confusion pattern the hold system is built to catch. Part 3. The $10,000 rule. What it actually is. There is advice circulating online that goes something like this: never tell your bank you have more than $10,000 in cash, or they will report you to the government. And it goes on to suggest breaking deposits into smaller amounts to avoid the report. I want to be direct. That second piece of advice describes a federal crime. Here is what the rule actually is. Under the Bank Secrecy Act, banks must file a currency transaction report for any cash transaction over $10,000. This report goes to FinCEN, a division of the U.S. Treasury. It is routine. It is not an accusation, and it does not trigger any review of you. It is one data point used to help law enforcement detect money laundering and fraud, not to flag retirees making ordinary deposits. Sell a car for $11,000. Deposit that cash. The bank files a report, and you will very likely never hear about it again. The crime is called structuring, deliberately breaking a large cash transaction into smaller amounts, specifically to avoid that report. It does not matter that the underlying money is completely legitimate. The deliberate act of evading the report is itself the federal violation. People have had their savings seized and faced criminal charges for doing exactly what those online videos suggest. So here is the rule. Deposit cash all at once. If it is over $10,000, the bank files a routine report, and there is nothing for you to do. Never deliberately split a deposit to stay under that threshold. Part 4. The Trusted Contact, Your Release Valve. I have saved the most important part for last, and it is also the simplest action item in this entire video. If you do nothing else after watching today, do this one thing. Call your bank or log into their website and ask whether they offer a trusted contact, an authorized contact note, or an elder protection contact on your accounts. Different banks use different names, but the concept is the same. A person your bank can call when they have a concern about your account. A trusted contact is not a joint account holder. They cannot move money or access your balance. What they can do is receive a call from your bank when there is a concern, to confirm you are okay and that the transaction is something you intended. This is the release valve. Without it, a flagged transaction with no one reliable to call just sits on hold for days. With a reachable contact, the bank may resolve the concern in a single call instead of a 2-week wait. Not a guarantee, but it changes the bank's options significantly. Name someone who knows you well and is not in a position to exploit you. An adult child, a close friend, a sibling, an attorney. Ask if you can name more than one. FINRA. Rule 4512 requires this for brokerage accounts already. Bank deposit accounts are governed separately, so ask specifically how yours handles it. Setting this up takes about 2 minutes, branch, phone, or online. One more thing, if you plan a large transfer, warn the bank beforehand with the payee's name, amount, and reason. Not required, but a transfer that arrives in context goes through differently than one that surprises them. Let me bring this all together. Banks are not your adversary here. The interagency guidance, the safe harbor hold laws, the trusted contact system. These are protective tools built for people in your situation against fraud that specifically targets Americans over 60. If you are not running a scam, you can navigate all 3 patterns by being clear, prepared, and acting in advance, and by adding a trusted contact today. It costs nothing, takes 2 minutes, and gives your bank a faster path to protecting you without turning a routine transaction into a 2-week wait. The real rule here is simple. Make your transaction look documented, not rushed, planned, not coached, clear, not confused. That is how honest people move money without interruption. This is not financial advice, and it is not legal advice. Every situation is different. If a transaction raises real questions about your legal rights, your account terms, or what a bank hold means for you, sit down with a qualified attorney or fiduciary and go through it step by step. That is always the right call. If this gave you something useful, hit the like button. It helps this reach more people your age who need to hear it. Subscribe if you want to be here for the next one. We cover the real rules of retirement money, not the fairy tales. And in the comments, type the word contact if. This reminded you to set one up today. I read those. It helps me see where people actually are. Until next time, take care of yourself.